Morning traders, welcome to this live currency strength indicator table video with me, John, on this 24th of July. Monday, start of the week, got a pretty big week in terms of data. If you head over to our tools page and you head over to our live trading calendar, although today we haven't really got much, we've had some already. We've had some Euro PMIs, Pound PMIs, and US. If we go over to sort of this week, we have quite a lot of data, including some really important stuff. So we have the FOMC interest rate decision, or FOMC statement, Federal Reserve interest rate decision. We also have the ECB interest rate decision, as well as some monetary policy statements out of the Bank of Japan. So real big week this week, and this could be a bit of a shake-up for the markets in terms of the markets may be a little bit quiet until these events. So this event really kicks off on Wednesday, so we may see a couple of days of pause or a couple of days of some range-bound movement before we see any kind of clear direction out of the markets. However, Euro has been really affected by this PMI data this morning. The Euro weakness has really come into effect here. Same with Pound as well, due to this services PMI announcement, which saw some declines. So there has been some real kind of changes to both Euro and Pound due to this data. Hasn't reflected yet on the table. Sorry if I just bring that back in. Hasn't really been affected there on the tables yet. In fact, we've still got kind of Kiwi and Swiss as the main currency pair to be focusing on. Now, we focused on this pair on Friday. We also focused on it on Wednesday. But today, what are we looking at? Nothing's really changed in terms of analysis here, really. The market is still trending to the downside. If you have a look at the weekly close, we had a strong bearish weekly close. That could obviously follow through into this week. So another bearish move to the downside could see price come towards that target area of the 0 spot 53 handle. Going down to a daily time frame starts to get a little bit choppy. However, our previous analysis was this 4-hour time frame, and what we were looking at in particular was this consolidation sort of cluster around about the 0 spot 53.80 up to the 0 spot 54. And what we're looking for is price to kind of tap into this level, reject, find some sellers again, like we saw break out of that consolidation, and then those sellers can push price potentially down to that 0 spot 53 handle. So this is what we're still kind of waiting for there. It tops our trend traders table, which is a good thing. The only thing is the Swiss franc is only the third strongest currency at the moment. I'd like that to be at least S2, S1. That would give us that momentum to the downside that we're looking for there. But essentially no change to our analysis on Friday, which was looking at Kiwi Swiss into this consolidation zone. The only thing that has happened is the fact that we are pulling back into it now. So we need to see how price reacts to this level. And do we get an opportunity to get short in here, with our targets being that 0 spot 53. Another market on display here, or what we talked about sort of previously as well. CAD yen sits at S2, W2. Now, CAD yen's quite interested in terms of that weekly close that formed. So if we just go to the weekly chart, we came in at this 104 spot 50 handle, that neckline of that double top pattern. We've rejected, had a strong bullish weekly close. So again, if we get another spell of yen weakness in the market, we could see prices back up towards the 109.40s, maybe even into the 110 handle. And if that's the case, then we could see a potential rejection in and around that area there. Now, what I'll be looking for again is those type of pullbacks. If we go down to the 4-hour time frame, we are kind of retracing back at the moment, but we still like the 106.60 handle as the level of support down through here. So again, I'm just kind of waiting a little bit longer, bit like New Zealand Swiss, waiting for a little bit more of a deeper retracement before starting to look at any kind of opportunities in particular into this market. Now, one that features at the top of the day traders is the New Zealand dollar versus the US dollar. This could be a tricky market to trade this week. Like I said, US dollar, has lots of data surrounding it this week. Could prevent it from sort of moving for the first couple of days. However, Kiwi dollar does top those tables, and it is an interesting market to look at, considering if we take a look at the weekly chart. The weekly chart are very compact at the moment between the 0 spot 63.80, 0 spot 64, down into the 0 spot 61. What I'm quite interested in is the lower time frame. Now you can see on this daily time frame, we've pretty much had 1, 2, 3, 4, 5, 6 consecutive days of bearishness. Price has broken through the daily 200 moving average back below prior highs. So I'm thinking price may want to trend a little bit lower here, perhaps into the 0 spot 61 or even lower into the 0 spot 6 handle. Now, if we go to the 4-hour time frame, price is trending down. We've got 4-hour making those lower lows and lower highs. So really speaking, prior lows in here around about the 0 spot 62.20 handle could be an area where price rejects and continues low. We've got trend line, bearish resistance coming in at around that point. We've got the prior lows. We have the 200 moving average as well. If I was to go down to the hourly time frame, you can also see the 50 moving average running through here as well. So look at all these kind of confluences surrounding that area between the 0 spot 62 and around about the 0 spot 62.25. So that zone in here, if I just kind of move the box, something like this, that zone in there could be a good area to start seeing whether that trend continuation will play out and whether we will see a downward move. Now, price has been known to break through the 50, so that's why I'm looking more at the horizontal level of resistance as well as the 50 moving average. Both can be considered resistance points at this moment in time. So I quite like the 62.25 handle. We suggested a 70 pip sort of stop loss, 75 pips. So let's say we got in at 62.25, 0 spot 63 would be your stop loss at 75 pips. You've got 120 pip for the first target. Second target beyond that, let me just grab the tool again, would be down at that 0 spot 6. So you've got a potential 220 pip reward there on Kiwi as well. So definitely something to consider. Now, as we've obviously been sitting here, we were talking about whether pound will come onto the tables and euro. Euro was there. It's just been swapped out by the pound now. Now we've got confluence here. So we could have a quick look at pound Swissy, considering that's just appeared on the table. Now, I know pound Swiss is working within a range, and you can see we're actually at the bottom of that range at the 1 spot 1075. But let's have a look at a lower time frame. Okay, yeah, I don't think there's going to be anything here for us right now. I quite like the idea maybe we trade through this weekly low in here. If we do, then we've got the 1 spot 09 to look out for, but I think that's a little bit early doors there for pound Swiss. But I think Kiwi's definitely the one to watch at the moment in terms of weakness. Can you try and pair that up with any kind of strong currency at the moment? Dollar, perfect one at the minute. CAD as well, but the Swiss franc is the highlighted currency, and Kiwi Swiss looks like it could still continue lower if we do get the right kind of conditions around that resistance level. So thanks for watching the video, and I'll catch you in the next one.